Welcome to the Fundamentals of Sponsored Projects at CSU series. This hour we are featuring Award Management Part 1, Fiscal Management. This is really focused on that departmental side. I am Catherine O'Hare, your moderator for this session. I am a Training and Information Coordinator with the Office of Sponsored Programs, and I am partnered today with Sam and Paula. They're going to introduce themselves in a moment. The presentation will last definitely 90 minutes. Hopefully we don't go over. There's a lot to cover in this one. And if there is something you want to deep dive into for a lunch and learn, submit that in the feedback survey at the end. That would help so much. Okay, on the website, we have our handouts. So I dropped that link in the chat. If you aren't familiar with that website yet, we have the worksheet that we're going through to try to be a little more interactive and challenge you in different ways, video resources or homework things for later. But there are also the PowerPoint slides if you want to keep it old school and keep your notes next to the slide. Totally cool. Otherwise, there's a big other notes section on the worksheet at the bottom. Thank you all for joining us. I see a lot of regular faces that have come to a lot of sessions and some new names. So I'm excited to see what will happen today. It's my pleasure to introduce our presenters. We have Paula White and Sam Reynolds. Will you please introduce yourselves?
Sure. I'll go first, Sam. I'm Paula White. I'm a fiscal assistant manager. A strategic business manager is my official title, but I do work in the College of Ag Sciences. I support agriculture biology. I also help out with horticulture and landscape architecture. I am mainly post-award, and I do not do pre-award. We have a pre-award grant facilitation team that handles that. So I am just post-award and a fiscal officer to all the accounts.
And I'm Samantha Reynolds. I'm the Senior Research Project Manager in Atmospheric Science. We do pre and post-award in Atmos and support specific PIs. Okay, so successful award management is a blend of both programmatic management and fiscal management. Programmatic management would include things like award setup, modifications, and some deliverables like technical reporting. Fiscal management is what we're going to focus on in this session, and it includes things like purchasing, monthly reconciling, cost transfers, and financial reports. Even though we're going to focus on the fiscal management, there are a few programmatic award management pieces that fall into the department level, so we'll touch on some of those.
Successful compliance sponsored project management award at CSU is really a shared responsibility between the units. In my case, the units are the college level and sponsored programs. I am a fiscal officer. I know there's several colleges that do split out those responsibilities. And we also have gotten several grants from the VPR's office where they do the large collaborative grants. OSP assists us with a lot of things. If we need, since I am post-award, I know that they assist you when you do the grant facilitation, but towards post-award, we do things when we need budgets modified, if we need effort reporting, that is all stems from the sponsor program office, project closeout, invoicing, and they also approve all of our cost transfers and things like that.
So I'm dropping the link to the OSP site. If you can open it in another browser, we will reference it a few times today.
Award management is going to fall under the post-award activities in part of the award life cycle. These activities can include award and financial management, project reporting, project closeout, and record retention. If you look on the OSP website, there's a life cycle with a matrix of responsibilities. We're going to look at the financial management responsibility matrix. And then I have a little activity. So if you found the matrix and can tell in the chat who has primary responsibility for fiscal management of an award. And then who's responsible for initiating the cost transfers. And then the last piece to try to find is, after the cost transfers have been initiated, who's responsible for reviewing them?
In other words, who do we send cookies to bribe, right? For
Yep,
our approval.
exactly. So the PIs are ultimately responsible for the fiscal management of their award. At the unit level, we're the ones that initiate the cost transfers. And then OSP or Bridget review all of the cost transfers. The unit responsibilities or the PI responsibilities might vary slightly across campus from this matrix, since every department is a little bit different. So in atmospheric science, as I said, we do pre and post award. So we have more project managers that work with fewer faculty because we're more involved in their portfolio management. We are the fiscal officers. We do all of the portfolio tracking. When is a proposal needed? What does the project staffing look like, or your research group staffing? And we're also tracking technical reporting. Okay, so we're the fiscal officers. We're doing all of the portfolio tracking, and we're also involved in some of the deliverable planning, like field campaigns or major workshops. And what our involvement is in those deliverables is including the fiscal management, what's allowable, how can we meet the objectives of these campaigns or these workshops while working within the systems that we have.
Okay, well, at the college level, post-award, part of when I get a new award, the first thing I will do is look for the budget. Sometimes I may have to contact our grant facilitation team, which is one of the drawbacks of not going cradle to grave, but I do pull the award. First thing I will do is just take a look at the budgets, because this is a lot of times the first time I'm seeing the actual budget. So I will kind of dissect it a little bit. If there's some specific people that, namely the PI, I will set up a sub account maybe to track their salary so that we don't overspend on other categories or other types of salaries, so that we kind of preserve their salary for them. I look at things like the 1% on the project, and I try to go ahead for the PI. We'll talk about that more later. I try to get that scheduled right away, first thing, or any cost share. If we've committed cost share, then we want to make sure that we're on track for that as well. I also make a note of items like publications, tuitions. Are they hiring for this new project? And, I support, there's probably 20 plus PIs in ag bio. So, and they have many projects. So a lot of ours, sometimes in the College of Ag, can be a little bit smaller. So it's just as much work for not very much money, but that's why we do what we do as far as the pre and post. It seems to divide that up a little bit more evenly.
So as part of being the fiscal officer or working in post award, we're reviewing all of the expenses on our accounts. We're reviewing expenses in quali financials like requisitions, P cards, purchase order invoices or disbursement vouchers, and even subawards. We're also reviewing some costs that post in Time Clock Plus or Oracle, and we use Symphony, which we'll talk about later. And then while we hope that all of the costs that were included at the pre-award stage meet the 4 criteria of being allowable, allocable, reasonable, and consistent, it doesn't necessarily mean that we can charge every expense that was budgeted on the post-award side. When we're reviewing a cost and looking at, is it allowable? Is it a cost that's eligible for reimbursement? Generally, they're considered allowable when they are necessary, reasonable, and allocable to the project. They comply with the limitations of the award agreement, as well as other laws and regulations. They're allocable. We're looking at whether they're allocable, which, what portion or percentage of this cost is appropriate for this project. Is it fully for this project? Is it half on this project, half on another project? We're looking at whether it's reasonable. Would a prudent person consider this cost appropriate for this service or product? And is it consistent? As an institution, are we considering all direct costs, like direct costs, and anything that would be deemed indirect and part of our F&A to be indirect? And then we're also looking at for justifications of the expense to verify all 4 of these criteria.
So once we have costs that have been charged to our projects, a lot of times we need to do transfers. Maybe it was incorrectly charged in the first place for a variety of reasons, but a cost transfer is when we move an expense from one account to another after it was initially recorded. These can become audit flags. However, they're necessary, in my opinion. We are all human. We make mistakes. And so we try to minimize them the best that we can. And now I think we're going to show you a short little video.
We all know that the big red flag is waved when there's a cost transfer. But we also all know that cost transfers are a reality, that we do have to utilize cost transfer. So why is it such a big deal? Well, it's a big deal when there's a cost transfer because an auditor says they didn't do something right here. What else didn't they do right? And how many times have they not done this right? And they start questioning. So to avoid that line of thinking when an auditor is looking at your books, we want to make sure that we have justification in place that tells the story, the whole story, nothing but the story, to keep that auditor on track from questioning further. So it is so important when you are justifying cost transfers to keep in mind these questions that are on the slide. Why did it happen? This is not a time to use copy and paste, to use prepared language. This is the time to tell the story specific to this situation. And then it becomes even more important when it goes beyond 90 days. If there's a cost transfer beyond 90 days, we need to know more than just why it happened. We also need to know why is it happening beyond 90 days and what corrective action has taken place to eliminate the need for a cost transfer in the future. The auditor must be able to understand the why it happened and why it is not expected to happen again.
Here at CSU, we have two different types of cost transfers. One is called the past period distribution adjustment, which is moving salary from one account to another account. Also, we have general ledger transfers, and these are basically everything else, non-salary adjustments, and that is in our quality financial system. A past period distribution adjustment can happen even in the same month that we're charging salary, because here at CSU, our salary runs around the 15th to the 20th of the month. So the month is not even completed. So we've done our best guess in a lot of cases as to what project or projects, because in a lot of cases I have them split over several projects, are appropriate for this student, this faculty member or lab person. And we do our best guess. And then a lot of times we find out, no, that didn't happen. They traveled, for instance, to a meeting. And so, but they're not working on that. That was a previous project they were working on. So then we would go in and do an adjustment where we'd say, for this part of this travel that, they were working on a different project or presenting results from a different project, we would move their salary from one to another. Generally, here at CSU, it's been easier in the last several months, because if it's under a month, you can make that adjustment and add your justification on there, and it doesn't go through another person to be approved, which speeds up the process immensely. We still want to have a really good justification on there. If it's over 30 days, that's when it routes to sponsor programs, or over 2 pay periods for an hourly employee. And so we're going to send those through OSP, sponsor programs, Office of Sponsor Programs. So the same kind of things happen in Quali. We have general ledger transfers where you're going to move an expense from one account to another account. We can use another item called a DI, a distribution of income and expense. We don't generally use those too often anymore because they've made GLT so much easier for us to do in the system. So, but I do a few times use the DI in place of the general ledger transfer, just because it's easier for me at that moment. But a general ledger transfer is the preferred method to transfer because it does move it completely from one to another. It's not dependent on human error. It will pull the exact amount. You're not having to worry about typos and things like that. So when are they necessary? When do we do these transfers? And if we go down the list here, pre-award costs that need to be moved to a project. If you have a project starting, which happens a lot to us, January 1st, but we may not have all the paperwork completed. We may not have the actual budget through the system and the account created. A lot of times we will create an account with a sub account or put expenses on an account that's on the department and then move those expenses later. When we do have the accounts, we can request a pre-award account, an advanced start, but sometimes requesting the advanced start and the account create are so close together that we just start charging expenses to another account. Again, we're all human. If we make an error and it needs to be corrected. I just found one yesterday where I had miskeyed the account number, and instead of 40717, I did 40719 or vice versa. And in Quali, I don't know if you're used to that last digit is a little blurred out, so it's a little hard to see sometimes. So it was just a human error. I didn't mean to do that, and I did. So I had to correct my correction. Another time would be when the expense is benefiting more than one project. Sam mentioned this earlier, and I know a lot of my PIs have very overlapping projects. For instance, I have a PI that works with trees, the insects that hurt the trees, the viruses that hurt the trees, funguses that hurt the trees. So they're testing for all of these things, but each one may be a separate pot of money. So we want to make sure we allocate that expense correctly to each account that this expense benefited. Another thing would be disallowed costs. If we had something that hit that account that is just not appropriate, you charged lunch to that account, and it's definitely not appropriate. You would want to move that off. That would be a real red flag to an auditor anytime food is charged. Object codes are incorrect. This one we don't deal with as often because sometimes it's in the right category, so we won't take the time to correct that. Not that that's the right answer, and OSP might tell you different. But for instance, if it's in the right category, if it's not, if it's in services and it clearly belongs in travel, we would definitely want to move that. And finally, to clear cost overruns. We overspent an account, not on purpose, but it happens because you have 2 things, 3 or 4 things in process at once. So they all hit at the same time. You thought you had funds, but something else kind of came in the meantime. So you would want to clear those cost overruns. There's instances where you would do a salary transfer on a general ledger transfer. And that's if you did a past period distribution adjustment, a PPDA, and in the process of getting that PPDA approved, your account ended. So when it goes to post, it doesn't post there, it'll post to your continuation account. And so if you look in the payroll system, it's showing it's on the right account, but we know it's not in the right account because it's on our continuation account. So at that point, we would need to do a general ledger transfer for payroll. It very rarely happens, but it does happen. I think one of the main things I use GLTs for is I do use a lot of sub accounts. We'll talk about that a little bit later. If the sub account is missed on the charge, I would like to move it to the sub account, or things like mileage. We're allowed only one account for mileage on a CSU vehicle, and it benefited more than one project, or they had that vehicle over the course of the month benefited several projects. So we will GLT that, general ledger transfer that to the appropriate accounts. And then there's just the random items that come in that we don't approve that hit the account, and maybe it's incorrect because someone gave the incorrect, or there is a default account that is incorrect. So there is a lot of instances over the years that we need to do them. And Sam's going to talk about next, why are they problematic?
Yeah, so this is a little reminder that you have some fill in the blanks on your worksheet that may or may not be relevant to this slide. Cost transfers are audit red flags, as Paula had said, and it's one of the first places that an auditor is going to look to see if there's fiscal mismanagement, and they're going to check the health of our internal controls. PPDAs become problematic when we're moving them between 253 accounts, when the transfer occurs more than 90 days, and if it looks like we're moving a cost at the end of the project, moving a cost to a project at the end, it appears as though we're using that to spend it out and may or may not be beneficial to the project. If there's not a good enough justification, then are we really demonstrating that this cost benefited the project? Or if we're moving between two sponsored projects to clear a deficit in one of the 5-3 accounts. And then, of course, any salary transfers that invalidate a project certification can be problematic.
We have a couple of questions. We had a question in the chat, which is, how are you handling auto build items that don't have a doc number?
Auto build items, could they be more specific? Like telephone or something like that?
Yes.
In my case, telephones are very rarely charged to projects. So that would be one answer, is I just don't deal with that. Other items, things like shipping, or again, I talked about mileage. I have all my mileage for my CSU owned vehicles hit one account, and then I disperse them once I talk to the PI to be sure that we are getting the correct accounts on that. For items like shipping, it's a little tough because, especially with the new EID, CSU EID, I know I've seen new ones that are C and they're 82 numbers. So I have no idea who made that charge. That one makes it's tougher. You kind of have to start with the PI and work your way out to their lab. And on those, I ask questions. I contact the PI and say, what are you shipping? What are you doing here? Why would this be appropriate? Why did you give your account number out? And then we go from there. Whether either it's appropriate and maybe I will add a note to that item, or I will move it and say, sorry, that's not appropriate.
I think if you can't identify what a charge is and it's on a 5-3 project, it should be moved. Would be the best practice until you can figure out what that is, if you don't,
Yes.
or if you don't. There's a question, another question. Someone has their hand up.
Hi, yes, I have a question about the PPDAs being done after the fact, because recently we had summer interns and the financing of the funding was coming from one account, and they realized, oops, we made a mistake. It's supposed to be coming out of this other account. And so I've been getting like several PPDAs to sign because the account is affiliated with our office. And so does that actually have a potential issue for auditing or red flag because it was so late in the game that we did this transfer?
So it is going to be sorry, go ahead, Paula.
Go ahead. No, go ahead, Sam.
It is going to be a red flag, right? Because it happened later, but justification really is the key. If you can justify why you're moving it late or why anything has been reopened, then you can turn a questionable expense or questionable cost transfer into just another allowable expense on the project, as long as you're providing a really good justification.
So Sam, will the justification does it have to come from the previous office or from me? Because they made the mistake. But I'm signing too, so my name's on there. So I wanted to make sure, like, who needs to make that argument?
Hey, this is Bridget. Do you mind if I jump in on that one?
Yes, please.
So the person initiating the PPDA is probably the best in the best position to provide the justification, because they're the ones ideally who are closest to the situation, right? So they're going to want to explain all the things that they've got on the slide here about what exactly happened, why it needs to be moved, why it's appropriate for the receiving account, i.e. the grant it's moving to. And so if you're receiving a PPDA that's already complete for your approval and signature as a department that's also involved, or a college level, or whatever that relationship is, I would expect that information would already be there. If it's not, and you're looking at it and it's not making sense to you, or there's nothing there, because I get those too, I would love it if you would go back to the person who sent this PPDA to you to say, hey, this is going to require a justification. So you may as well put the justification in there before you ask me to sign it as yourself. Or when you send it over to OSP, they're going to ask you the same thing. So, I mean, that would be amazing because I think it would get everybody in the habit of thinking about where the justification needs to come from. But to answer your question directly, yeah, I would say the person initiating, the person who is closest to the situation, is ideally the best person to put that justification in.
Thank you, Bridget and Sam.
Yeah, and we'll talk about reviewing expenses a little bit later on too, but even when you're in quali or you're reviewing the the PPDA, I have sent emails to whoever has initiated like a P card expense that didn't have adequate enough justification before I approve it. So, you can always reach out and ask for more information if it doesn't meet your standards.
I just want to jump in and just say, bottom line though, is if there is a problem or a mistake on your account, we do have to fix it, regardless if that's 90 days or 10 days that happened, or over 90 days. So keep that in mind, is that we want to make sure that we are removing things that are mistakes.
We don't make those though.
You said we're human, Paula.
Oh, yeah, that's right.
That
I
should
said
take
you all are human, right? Just kidding.
I'm not trying
Not
to
all of us are.
monopolize your time, but because that last comment was said, is this when I have to do a cost transfer or not? I mean, like if this event happened like in the summer, which it did, and now I'm getting all these PPDAs now, that
If
account
it's a
may not
mistake and it
have.
should, if we
Yeah.
have two 5.3 accounts and those costs should not have been on that 5.3, you will need to move those costs at any time that you figure out that they should not have been there. So
Okay.
yes.
Okay, thank you so much.
One of the big audit risks is where are you moving it to, I think is in that case. If it's that old, there's no way you're going to move it to another 5.3 account. It's just too late and too bad. So if it's incorrect, it's incorrect. It needs to come off.
So any justification that's over 90 days is going to need a little bit beefier of a justification in order to move it from unallowable to allowable. And I'll show you some examples of that later on. The one thing that I want everybody to remember is that these transactions might be audited years down the line. So be kind to yourself or your future replacement and provide a lot of justification and proper documentation. You've processed a general ledger transfer on a 5.3. You're going to get a prompt for this certification on all 5.3 projects starting at day 0. So if it has posted as soon as you realize the transfer, even if it's the next day, you're going to get this message. The last 2 boxes are going to talk about, what you're going to do to correct this transfer or keep it from being late in the future, and why did this adjustment happen late. If you're moving it within the 90-day window, you can just put something along the lines of not late or NA not late or something. So you fill all of these out and you're about ready to hit approve. And after you've approved, you're going to get prompted for this GLT attestation where you're certifying that all of these expenses were incurred for the goals and objectives of the project. They have a benefit to the project. But if for some reason they're deemed unallowable by a sponsor, then you as the fiscal officer, the PI, and the department head will all agree to do what needs to be done to correct it or move it off. And then it'll record your name in quali that you have certified.
What we're showing here is an example of a PPDA that has been created more than 1 month after the wages had been charged. And in that case, you would need this additional signature. And it's problematic because, of course, we want to schedule that salary correctly in the first place. But like I said earlier, sometimes because our payroll runs so early, it is just not feasible to do that. So they do happen. If you are including a 5.3 account, that's our sponsor projects accounts, you would want to route it to sponsor programs for that bottom signature as well. And I believe Bridget's the one that does most of these approvals, at least for us that she does. And so one thing I wanted to I'll point out is that there is a second signature line there. If you have a 5-3 or an account, whatever, in another college, another fiscal officer, please route this to them for their approval as well, because this is also affecting their funds. And it's hard to see all these changes in your accounts and to approve anything if you're not even given the opportunity. So I would just caution you to please do that. I've had them go through without my signature, and I went, what happened? What was with that? So I never even had the opportunity to approve it. So it would be, I didn't get to complain about the justification because I never even saw it. And so it doesn't happen with Bridget much, but it has happened. So just be kind to your other fellow people who are out there just trying to survive like you are. And reconciling, our favorite topic, reconciling. What is reconciling? I think if you asked 5 different people at CSU, you'd probably get 5 different answers. In the college bag here, we deal with a lot of quantity. So everything that goes onto my accounts, I approve. And so in a lot of cases, I am looking at those expenses over and over. So not only am I approving it, but then I'm looking at the account and I'm scrolling it through it to see, what doesn't fit here. And that's what I mentioned earlier. It happened yesterday. I realized, oh my goodness, this does not belong on this account. I realized I had made the error. And so how often you do it and how you do it is a good question. And everyone does it different. There's many tools here that we have at CSU that we all use differently. And that's what we're going to try to talk about is how do we do it? And, really, what is it?
So this is the formal definition of reconciling, which is a systematic review of transactions and how they fit on an account. When we're reconciling, we're looking at things like, were all of the salaries that were supposed to post here, did they post? Were there any salaries that posted that didn't really fit here, maybe from another department by transposing a number? Do I recognize all of the charges that have posted this month, or are there charges that I expected to see but didn't? Anything weird that posted to the account, like the amount was charged twice with the same document number or anything like that. We're also reviewing the indirect cost or the F&A column to does what posted match what I expected from the award? And does the F&A charged this month agree with the rate that was shown? But remember, some expenses like capital equipment or fabricated equipment, participant support, and subawards that are over 25,000 are not subject to F&A. So keep that in mind when you're reviewing your F&A charges. Paula can talk a little bit about the use of sub-accounts in reconciling. My preference is child accounts when reconciling, so when we bring up child accounts versus sub-accounts, it's generally when you have multiple PIs in other departments that these sub-accounts or child accounts could be helpful.
Very much so. I think for me, the difference between, and maybe some don't know the difference between a child account and a sub account. A child account will be if you get a new project and it's a very collaborative project, in my case anyway, and several different colleges are working together on this one. We can create a separate 5-3 account number for each college. And that way they can manage their own funds. They have the most familiarity with the expenses. I use sub-accounts a lot when it's within my own department, and I'm just trying to track things like salary, or for instance, if I have 2 PIs and each one get, half of the travel budget, I will split that and put that on their own so they can watch their balances a little bit easier. So that's one of the things I do. I know not everyone likes sub-accounts, but it really does truly work for me a little bit better. So that is another way that you can see whether when you're reconciling, if you look at one of the sub-accounts and hey, Crazy Harry's on this one and he shouldn't be, he's on the other one, that can be a part of your reconciling as well.
Yeah. What I like the most about child accounts is since you get a separate 5-3 for each of them, the indirect cost automatically follows the child account, so you don't have to worry about the indirect cost splits. If Thera, for example, has a
a child account on one of my awards, I don't have to look at it. It's kind of that fiscal officer's responsibility, but at the same time, if I want to keep an eye on it, I still have the ability to look at it. That's
I
why I like
completely
to.
agree. I saw that Christy popped up in the chat and asked about budget on the sub-accounts. And yes, I do transfer budget to sub-accounts. And I do also, if there's indirect, I will transfer the indirect cost budget to that sub-account as well. So when they see that balance there, they know this is my amount, this is my full amount, and not the spendable amount, it's the full amount. So they will have to do that. But I do transfer the indirect cost budget. You just use the budget object code of 9,000. I believe it is.
They're
Can you
asking
do it
if you're
as
transferring the budget or is OSP transferring the budget?
As the fiscal officer, I do a budget adjustment and I move that to the sub account. Correct.
So some pros and cons.
And really what we're trying to show here is that there's a lot of different ways to do post-award management at CSU. And that's why we wanted to have two different departments who do things very, very differently to come here. Because I don't think that there's necessarily a completely right, this is better than this. These things have evolved because it has been better for them in their units. So if you have some questions, then direct them to Paula or Sam, or you can come and talk to me about what might work better for you if you want to come see me at office hours tomorrow.
So I think now we're going to talk about some of the systems that we use for reconciling. But I'd like you to drop in the chat what system you prefer to use to reconcile. We're going to briefly mention the top 5 that are available at CSU, or what we deem to be the top 5, I guess. I'll focus more on Vista and Symphony, and Paula will dig into KFS, RPS, and Web Focus.
We're getting a lot of Symphony.
Lots of Symphony, yep.
A lot of Symphony, but also most of the people who said Symphony are also engineering people, so that stands to reason. It is a engineering created tool.
Vista is the official CSU financial record. It's used by sponsored programs, and the information that posts in there is usually static and pretty accurate. There are tons of different types of reports in Symphony, so you're usually able to find one that fits your need. And the reports involve a lot of accounts. The other 2 major benefits that aren't on this slide is that some of the year-end transactions that don't necessarily show up as easily in other systems will show up here in Vista. And Vista is a good resource for any accounts that run off of cash balances rather than budget balances. There are some drawbacks. They are harder to read, especially now that they've transitioned over to whatever system it is now. And some of the expense information isn't broken out by transaction any longer. So if you need to dig into the details, Vista is not necessarily as user-friendly of a system. There are a lot of different types of reports, so it can be difficult to find which one is the best for you. And they're downloaded in a large PDF format that you have to kind of dig through to get what you need.
Someone's asking the cash balances. Are they like 64 foundation accounts or 12 revenue accounts?
So I will turn to Vista when I'm trying to reconcile like a 22 or a 21 account and get the balances of those, because I also use Symphony primarily, but Symphony isn't great for those kinds of things. And 6.4 balances are also not always accurate in Symphony either. So Vista is what I would turn to for that. But I think Paula has a couple of other accounts that she uses or can't use Symphony for.
Correct.
And Christy had asked if we would comment on what's accessible to all university FOs. And Christy, all of these systems are accessible to anyone to be able to use.
I get the benefit of talking about our RPS, which is research project status. You would access this through the AAR, and I forget what that stands for, but I think y'all at this point probably will know what that means. The benefits, And I use this system, to be honest, I don't use Vista at all. I don't even know if I have a login. So I never use that. So that's why it's really interesting to see the different perspectives. But some of the benefits of RPS is you can search 5-3 accounts all over the university. So if I see an account that's popped up and maybe there's a typo and it routed to me, I can say, well, this is the wrong account. Let's see who the right account belongs to. And I can look that up. And then that way I can contact the right person and we can make this right before making more work for anybody, really. You can see the account details. You can see your dates, deadlines, contacts, PIs. PIs include, there's a little tab for personnel that will show you all the PIs, PI, co-PI, and any key personnel that you may need to know about. Some of the information in the financial section, you can expand on it and it'll give you some additional information on, say, types of employees that maybe are encumbered or have been charged, that type of thing. So that's some of the things you can drill down on. And then you can also see encumbrance for salaries and or supplies and things like that. One of the drawbacks, it is 53 account information only. You can only look at one account at a time. You can't pull up all of your accounts on 5-3 and flip through. You have to know the account before you look because you have to have that 5-3 account. It's dependent on the system. So it should be accurate as of the night before. So a lot of times if I am really trying to clear an overage on a project, I will go to RPS and see what is fully been approved as opposed to Koale Financial System and see which may or may not include pending. We'll talk a little bit more about that when we get to KFS. And again, you can't drill down on anything and see the PO number or anything like that where you can go directly to that. You would need to go then to Koale and look up some of those things. So that's some of the drawbacks. I think it's a really good system I have given to my PIs so that they can have a quick once over look. I think it's a real easy to read and it's just a real quick read for kind of the high level balance information.
Okay, so Symphony is what I use primarily to reconcile my accounts. It is very easy to read, Symphony. You also have the ability in Symphony to impersonate other people. So if I need to look at that Sierra Child account, I can either search by the account number or I could impersonate the fiscal officer on that account and see their list of accounts. My favorite part of Symphony is the drill down feature on expenses that allows you to see the individual transactions that have posted in Koale with a link to take you straight into Koale to review that document. The dashboard also shows you all of the accounts in your profile, so it's easy to move between your accounts, and on the PI side, they can see all of the accounts in their profile. And your view is customized for your role. Symphony also has these other tools like the time and effort module, and we use that in our department on a monthly basis to do our monthly time and efforts. The biggest drawback to Symphony is that the information only covers fiscal year basis. And the budget and expense information is dependent on the ODS database. So if there's a delay or something happens there, then Symphony information isn't going to be up to date. It doesn't really have tools for projecting or where they are, they're a little difficult to use. And as we've said before, the cash and gift account balances aren't always correct because it pulls budget balances rather than cash balances. But Symphony has this link to RPS and KFS. So if you need to look to see if property is included in your award, you can click the link to RPS and it's going to take you there so you can review the terms of your award. So it's kind of like the central hub for everything project management related. I am
going to put a caveat that the terms and conditions that are in RPS can be limited because they're only limited to what sponsored programs codes have to follow from the award. So you still need to look at your award document. That's still very important. But there's also another comment in here that you can export into Excel. I never tried that.
Yeah, that's a huge benefit that should be in this list.
I just want to say Word document, what is that? We're supposed to look at the award document. Anyway, sorry. We do look at award documents. So KFS, Quality Financial System. This is what I use for the majority of what I do. Every financial transaction in the university goes through KFS. So if you look in KFS, you can look through at anything. You can search, you can do all kinds of things. But let's go down the benefits list. You sign in with your EID and you can see your action list. For those of you that travel, or you can approve your travel in that place. If you're a fiscal officer, this is the place where you approve items and it lists them out. You can sort them, you can do all kinds of things, but this is kind of your action list. These are the things that need to be done and approved. You can view pending entries. However, with the last update, the pending entries are a little funky. They're not as easily accessed as they used to be. So if you're wanting to look at pending entries, I would recommend looking at the pending entry tab or general ledger entries, where you could see everything that's hit that account for just the current period. So for instance, we're in February, you would need to choose the 08 period, and then you can see all the pending that's out there. But when you look up your balances, you can choose to include any of those pending entries. So it's kind of a nice tool if you're approving something that's kind of on the edge of being done and not having enough funds. It's kind of nice to be able to include those and not have to do the mental, math damage that some people. You can look back at transactions. You can go all the way back to fiscal year 10 when it started. A lot of times if you search all the way back, it will error out because it's so much information that it's going through that it gets tired. So I would recommend limiting your search if you're looking for something. You can get up to the minute cash balances, and that includes if you're entering, anything pending. A lot of times we will get checks and you put the cash receipt in, you can immediately see, once that is at least saved, you can see the pending balance for that. I love it because when things route to me and it's not the right account, for instance, I have a PI that's ordered supplies and they think that it's appropriate for this project. And for whatever reason, number one, the big one is it's not appropriate. Number two, there's no money. Number three, it's just wrong. I can change that as the fiscal officer to another account under that same PI. So that's one of the things I love. I don't have to send it back always. Sometimes I can fix the problem, make a note that, yes, I fixed this problem. And I changed it because it's either not appropriate or what have you. My favorite is when they try to charge meals to a 5-3 and we just say no. The drawbacks, it isn't as easy to read, in my opinion, until you get used to what you're looking at. But it's not as pretty as Symphony. And I will agree with them. Symphony is very pretty and very nice to look at. It's a great system. It's just, you cannot look at cash balances. And that's our biggest drawback, because our 6-4 balances. So I do send out Vista a lot, but because our PIs find it difficult to read and navigate in. And you can't search for on the pending, you can't search for more than one period of time if you're looking at pending entries or fiscal years. You can only search one fiscal year at a time. So that's some drawbacks. But again, since everything goes to Koali, that's my favorite. But it's not always intuitive for everything you need to do, like reconciling. So I'll be glad to answer questions if anybody has that. Just hit me up if you have some questions.
There's just a comment in the chat from Mandy that said that you can search by more than one period at a time, enter a % sign, and it will bring up all fiscal year periods.
Correct. Yes, you can search for the whole fiscal year.
I will say that when KFS and KRPD went up to the cloud, there were some little modifications that we had at CSU that went away, that they couldn't add any longer. But one of the benefits of being in the cloud is that we get some same day transactions in there now. Everything used to have to go overnight in order to process, and that isn't the case on everything anymore. So kind of the benefit, weighing the benefits of that. So
yeah. So you can include some of those pending entries, but again, because it's almost, some things are immediate. Is it pending or is it fully approved? You kind of run into that awkward stage now, where before you at least knew it was pending because it had to refresh. However, you can get an up-to-date balance. So I do like that. Web Focus. I know this has been around for a while here at CSU, and we've had several people working really hard to get some really great reports out of Web Focus. So we're looking forward to hopefully what, if it doesn't continue, what will replace it. One of the biggest benefits I find from Web Focus is what we call the clutter report. And the reason it's called the clutter report, it's all those items that hit your accounts that you don't approve. Things like airlines, mileage, telephone, shipping, all those items that hit your accounts, there's no approval. We have a report that comes to me once a week because that's how we have set it up, that will email to me. I open it and I can see all those things that have happened that I wouldn't know about. I would have to look through all of my accounts, which is not possible because I have 400 accounts. So there's no way that I could go look through each and every one of them to see if something hit there. So it's wonderful. That's a really great benefit. It's easier to read than Quali. The reports come and there's a lot that we can drill down on. You can throw them into tables and do things like that. So I find it, because it's a report, it's not just looking into Quali. It can be sent to PIs. We have most of our PIs receive these reports once a month. And on that report, they have several tabs that will look at all their each different types of accounts, their budget accounts, their 5-3 accounts, their cash accounts, and there's staffing on those accounts. So it's really kind of a great thing because the PIs are getting the information whether they want it or look at it or not, but I don't have to keep up and create something to send them. And it's a great thing. Ours go out about the third of the month because usually year end, the month end rather, messes things up. So we can also look at the entire department. I can go in there and look at everything that's under my department or another one I'm a delegate on. I can look at that as well. Drawbacks, again, training's no longer available and it's going to be replaced, but we're hanging on to it with tight-fisted fingers until that happens. It doesn't include anything pending because, again, it's a static report. It pulls it as of the last time it was updated from ODS. So you're not going to get anything pending in that. So if you want that, you'll need to go straight to KFS.
Okay, there's one question. I feel like you did. It's perfect because it's our check-in question moment. Chrissy was asking about direct links in RPS when you can get a specific account number link sent to a PI. But I think that I want to open this up to all 5 systems that we talked about. Can any of those systems, or which one do you recommend most for sending a direct link to an account number for a PI or the team?
I don't know that I've ever done that, so I'm not sure.
Yeah, I would think Web Focus, and like I said, we set those up so that I say I had not anything to do with that, but someone in our office set that up to send to the PI, and that has a list of all of their accounts. I don't know of a specific link where you could send just one.
Are there any other questions? We made it through reconciling systems, cost transfers, and the different day-to-day options of being a research administrator in a department at CSU. Web Focus is nice to pull data over multiple fiscal years and accounts. People really love the scheduled reports for Web Focus. Symphony HTTP address works if they are allowed to view that account. So access related. Okay. I did drop a link to our recording of the Symphony Lunch and Learn that we did, one of them.
Jim Jensen and Andy Crane did that from engineering. And if there are Symphony questions specific about how to do something or get access, they are the people who you'd need to contact. So.
Niall says it's possible to delegate view access in Symphony also.
Or impersonate, according to Sam.
Mm-hmm.
Yeah.
I love to pretend to be people. It's fun. Okay, so a lot of units have their own shadow systems to keep track of their portfolios. Paula and I will briefly touch on some of our Excel shadows that we use. And as far as giving specific account information to my PIs, I use my Excel shadow system to give account reports to my PIs rather than sending them any links from Symphony or anything like that. Okay, so here in atmospheric science, because we have fewer PIs that we work with and generally a smaller We don't have 400 accounts like Paula does. We have 2 workbooks per research portfolio. We have one that houses all of the project data, like what is shown here. This specific example on here is one project. So each project has its own tab and it feeds up into this big picture sheet that shows the PI the health of their overall portfolio. And then we're tracking reports when technical reports are due. If there's a field campaign, we're tracking the timeline of the field campaign so that we know when expenses are going to peak and then come back down. Pretty much everything from award setup to closeout is in this project portfolio. And the big picture graph is the overall health of a portfolio, for an example. The second workbook houses all of our personnel data for that research portfolio. And the reason that we do this is each member of that research group will have their own salary tracking sheet because situations can change, things vary so much. But in these sheets, we're tracking when do we expect promotions or raises. We're looking at when does somebody's funding look like it's about to end, or when does somebody run the risk of being overfunded. I shared the example of a graduate student here. You can see that they're funded on multiple accounts. And because they're funded on multiple accounts, we need to be able to appropriately allocate their tuition to these accounts to follow their effort. And built into these sheets is a formula to break down and allocate appropriately the tuition to follow effort. Both of these portfolios together will help us to lead or guide the PI and tell them this is when you should probably start submitting some proposals because you're headed for a big dip down the line, or so-and-so is going to run out of funding soon. Do you have any ideas for this person? Yeah, these are conversation starters and a good way for us to keep track of what's happening in our groups.
This is an Excel sheet that I use. I don't have the tuition component. I love that, Sam. Unfortunately, a lot of our accounts change really often, so it would be great to be able to forecast that. But this is the Excel sheet I use for each person in my department that is on a salary. I don't use it for grad students, and if I have employees that just have one account, I don't often use it. The blue lines represent budgeted accounts, and then the white lines in between the green would be summer salary because it kind of overlaps that 9-month assignment. So I can check, their effort all the way through summer and all the way through their 9-month assignment. I have a lot of people who are split upwards of 15 different accounts, and I can't keep that all in my head. I don't know about y'all, but I can't. So at the bottom, I will list all of their accounts at the very bottom that are active and how much salary budget they get. And then as I put it on there and schedule it as we plan how that salary is going to be spent, it kind of subtracts out there. And you can see at the bottom, my ABC grant is at 1 cent left because I have spent it up above. Of course, I don't have 5-3 numbers. It's all pretend, but anyway, this is how I do it. It helps me because I have many PIs that maybe have 10 different grants, and I'm tracking that 1% on their grant, and they have different starts and stops, and I'm watching this as they go. So this way I can kind of plan that 1% out, and I can plan their summer at the beginning of each, project or each fiscal year as well. And then as I get a new project, I will add it on here and add that 1% in as well. Or if their effort is higher, then I will add what is appropriate for them to have that. So again, we have each have our own little different ways. Off to the right there, it helps me, especially on the one that's split 15 different ways, that helps me with my labor distribution off to the right. So when I go into Oracle, I can just pull the percentages off of there instead of trying to mentally do the math when you can see 4 accounts, in Oracle at a time. So it helps tremendously when you have projects starting and stopping at different times.
In the terms and conditions of an award, we're also agreeing to certain reporting requirements in both the technical and financial aspects of an award or a project. The technical report is not financial in nature, it's more scientific, but it stays with the department because it is the PI's responsibility to complete this report. For some sponsors, the PI is allowed to submit the report themselves. Others will require it to go through sponsored programs and have the AOR submit it. It's always best practice, though, to make sure that OSP gets a copy of it to keep in there so that they have a full project folder. The technical reporting is generally annually with a final report due at the end. They can be cumulative or they could just cover the last period that wasn't reported on. But some sponsors will require them more often. I manage an EPA award where we have to do quarterly reports, financial and technical. And I manage another NASA award where we do monthly financial and technical reporting. It's important to review your terms and conditions and see if more frequent reporting might be required. Again, this is the unit responsibility since it sits with the PI, but not all department research administrators track or help with the submission of technical reports.
I would be one of them. I do not help with technical reports. And many of our projects, bless your heart, you do monthly. No. Effort reporting, here we go. What is it? Effort reporting is where we tell our sponsors that, yes, we have looked over the amount of salary on these projects, and yes, it is appropriate. It reflects what was going on in the project. When we go into eCert, which is our effort reporting system that comes from OSP, we as fiscal officers do what we call pre-review, where we will go in and look at these different projects and see if the salary is correct. You know, I have opened up in eCert and seen an hourly person. Again, there was a small typo, and now this hourly person is showing on there, and we didn't catch it before this time. So it's really a great tool to aid you also in your reconciling. So what is effort reporting? Here's the official definition. It's the mechanism used to provide assurance to federal or other external sponsors that salaries charged or cost share, that's also included in eCert, to sponsored awards are reasonable and in relation to the work performed. Effort statements are referred to as certifications or reports. CSU uses effort certification reporting technology. It's eCert, very much easier to say. Application for effort reporting. Again, something we didn't mention earlier with the PPDAs is going back more than 90 days. There is it's very likely that that project has been certified. And that is even a bigger red flag than the PPDA itself. And so once these projects are certified, we don't like to reopen them. And I've had specific reasons why we've had to have them open, but it really is a red flag. And so do your diligence during effort reporting because it really can benefit you in the long run and you don't have to go back. I know before we went to the eCert system, it probably wasn't looked at as closely, and I really do appreciate the new system. So thank you, OSP, for that.
Okay, so this is the start of the effort timeline. At the pre-proposal or proposal stage, we're considering things like, is there a current employee that could do the work that we want to propose, or will we need to hire or recruit somebody? At the negotiation stage, we're looking at, has there been a change in the scope or a change in the budget that means we need a change in scope, i.e. cutting people or effort, and making those adjustments accordingly. You get to the award stage, and at the award stage, we're starting to hire people, or we're assigning people that already have their employment terms negotiated. We're setting up that award. You get to post-award. We're checking effort monthly. Okay, so in Atmos, we check the monthly effort with the PI. We do monthly time and efforts. So we're sending out every month, this is how I have your people staff. Do you like it? Do you want changes? They come back to us, and then we use Symphony to make the changes. And then we're reviewing the certifications that post in eCert. We're pre-reviewing those before they go to our faculty to make sure that they match up to those project sheets that I showed earlier. And then after that, it is certified by the PI. When we get to the end of the project, any individual that had time on the award should also be included in their final technical report. That way, all of our T's are crossed and our I's are dotted. We've made sure that everybody that was supposed to work on the project worked on the project and that they've been properly accounted for in their reports.
I was just going to say, I'm not going to let my PIs talk to you. They're really going to want me to step up my game. Just kidding. We do I come in at the post award stage. And so again, like Sam, we go through the salaries, we go through setting up that project and then reviewing it. For us, the review a lot of times more often happens during eCert because it's about every 3 months. I get a really good check-in with each one of my PIs. Some are more often than that, but at a minimum. And then they do the project reporting. So that is something that I need to work with them a little more closely to make sure that they are tying in that effort to their reports.
But again, that's the difference across campus, right? Like, it would be impossible for you to track all of these things for 400 accounts. On average in ATS, normally we would have maybe 70 accounts and 6 PIs that we work with. So it's a little bit easier for us to be as hands-on as we are. In one of the previous sessions, there was a question about reporting and for NIH and NSF, if they want you to report in whole numbers, how should you report effort that's maybe a quarter of a month or a half a month? Would you report 0 or would you report 1? Well, the best practice, in my opinion, is to report 1 because you had effort, right? If you showed 0, then that would look a little weird to a sponsor reviewing your report that says, what, the PI had 0 effort. You want to show that they had something and then they can elaborate on it in their report on the time, on what they did and what their contribution was.
Ironically, in eCert, if they have under 0.5% effort, it will show 0, but it will show a dollar amount. So at least you know it's not totally 0. So what is eCert? We talked a little bit about. It's an after-the-fact effort reporting system where we're certifying these wages are appropriate for these projects. And are we going to navigate to that? Do we have time?
I just gave them the direct link, but on the homepage, it's the quick links just takes you to a lower part on the homepage where you'll find some of these ones that we mentioned in sessions, like the subaward one, or commonly requested information was popular at proposal stage. So effort reporting is where you can find it there, but the direct link is in the chat.
And you can also get to effort reporting through the AAR eCert through there as well.
Okay, so in the chat, could you answer this question? Do you think that 100% effort is okay on sponsored projects for faculty or for research staff?
Yay, there they go. Yes, if it is in the proposal. No, they do other stuff. Okay. Anyone else?
I feel like these are two opposing views. One on either side.
And the correct answer is, it depends, right?
Yep.
Yep. So I do have a few research staff that are fully funded on research projects. They're 100% on sponsored projects. They're research staff and postdocs. They only do research. They don't participate in committees. They aren't advising any of our graduate students or submitting any proposals. They're solely working on the research component. So we can justify keeping them 100% on projects. But faculty cannot be charged 100% projects ever because they have a teaching component, right? They're faculty at a university, they're teaching the next generation of scientists. So we need to account for that time as well. In our department, when we encounter something like parental or FML leave, or we find out that somebody that's 100% time on a project is going to write a proposal, then we're moving that appropriate amount of time off of the 5.3s and onto a department account to cover that time so that no certifications are messed up. We've properly allocated their time, etc.
And here in the College of Ag, we're a lean machine here. So we very rarely have anyone that's 100% staffed on a 5.3 project. At a minimum, I would say 95%. And if there is 100, we do look for some type of justification like Sam just gave you. For our faculty, like she said, they're either teaching or they're writing new grants or they're doing something else. Our research staff, a lot of times they're approving time clocks, even something as simple as that, where that time clock isn't specifically for this one project. They're approving the hourlies that may be working on a whole bunch of different projects. So here we very rarely do charge the 100%. So my go-to answer is no. But again, it depends.
And at CSU, we actually have a policy about this, about time. So Kat put in the link to this policy. If you have research staff, if you have faculty, go read this policy. It's eye-opening a little bit. And then you also have a place to show your faculty or potentially somebody in your department, this is why we can or cannot do these things. So
Mhm. I just figure I err on the side of caution because I don't know what they're doing. They're out there doing their thing, and I don't know if they're working on their thesis or their, as a grad student or what they're doing, traveling home or, I can't track all these people. So I just err on the side of caution, and we really do follow that 95%.
What's the minimum effort that somebody should have on a project?
Oh, should have on this project, according to, yeah.
Yep.
Way to go, Audrey and Amanda. Yes,
Yeah.
at least 1%. Correct. That's why in some cases I have people split very many different ways because we're trying to capture that 1% either through a cost share account or through charging directly to account.
But why do we do this? Why do we really care if somebody has 1% on a project? Well, generally the sponsor is awarding this project to a PI or a senior personnel because of the work that they're going to contribute, right? So if we had a project that didn't have any time for the PI, the sponsor could look at it and say, well, I awarded this to you based off of what you said you were going to do. Did you actually do it? Or why was there no salary there?
And we should say that ideally, we should be charging the amount of effort that they're actually putting into the project.
Yes.
To the project. There are cases where we go to the 1% because that PI is not doing as much effort on it or saying they're not doing as much effort on it. I'll go there. But ideally,
Yeah.
it should be we are charging the amount of effort that they're actually spending on a project.
Yep.
So I would agree with her. This is ideal. However, we never get fully funded for the time that our faculty spend on their projects because we do a lot of smaller type grants. A lot of times the PI is just not even staffed or budgeted rather more than 1%. So we do supplement our research a lot here in the College of Ag. And so I view that 1% as yes, it was sold to me as it's going to route to eCert. Otherwise, you're certifying no effort. But when we put 1%, that is a bare minimum of what they're spending on that project. It would be ideal, and we'd love it because then we'd have so much more money. But we do have many grants where the PI is just really, there's not enough money there to staff them or budget them even part of their time. So we do go with the 1%.
I just had to throw out the ideal.
Ideal, I know, perfect world.
Some resources for y'all as far as some of the award management tools that we mentioned today. If there's something else that you guys use, let us know. If there's something new out there, it would be great to know about it. And when that new system that comes out, that's going to be replacing WebFocus, it would be great for the entire community to have access to something like that because WebFocus I know is a really powerful instrument that people really loved. Templates. Susie, are you talking about templates that we showed today about project management on the Excel spreadsheets?
Yeah, reach out
if
to
you-
Sam. She said that
Yeah.
she could provide some resources for that.
Mhm.
The last one we have is next Tuesday on award management, the administrative side of stuff. So we have some of our OSP SRAs speaking to that one.
Yeah.
Thank you all for being here today. I would like to send a big thank you to Sam and Paula for leading this presentation. There was a lot to cover and you did it. You're amazing. Thank you for sharing your dynamic, different perspectives from two different departments. That was really helpful. and a lot of practical things for us to take away. So thank you so much for doing that. I appreciate everyone's participation in being a part of this session today too. On behalf of the Training and Professional Development Committee here at CSU, thank you for your participation. We hope to see you Tuesday.
Thank you all.